Buckle up, everyone, because this week in the stock market was an absolute roller coaster. From gut-wrenching drops to jaw-dropping recoveries, we saw it all. Billions wiped out, then billions gained back, all thanks to one word: tariffs. If you're wondering what the heck happened to your portfolio, or why Wall Street was in a frenzy, you're in the right place. Let's get started. To understand this week's madness, let's rewind a bit. Coming into April, the stock market was already on edge. The S&P 500, Dow, and the Nasdaq had been sliding since mid-February, down 4.6%, 1.3%, and 10.4% for the first quarter, respectively. Why? Well, investors were jittery about inflation, a stubborn Federal Reserve holding rates at 5.5%, and most importantly, President Trump's escalating talk about tariffs. By April 1st, the market was like a tightrope walker waiting for a gust of wind. Then on April 2nd, that gust hit. After markets closed, Trump announced sweeping reciprocal tariffs on nearly all US trading partners, starting at 10% but spiking as high as 54% for some countries like China. Investors panicked. By the end of last week, April 4th, the damage was brutal. Last Friday, April 4th, was a bloodbath. The Dow plummeted 5.5%, losing 2,200 points. The S&P 500 sank 6%, and the Nasdaq, it dropped 5.8%. Officially entering bear market territory, down over 20% from its peak. This was the worst week since the COVID crash of 2020, with the S&P 500 losing 9.1% and $4 trillion in market cap. Why? China retaliated with 34% tariffs on US goods, sparking fears of a full-blown trade war. Social media was buzzing with shock. Some posts claimed $7 trillion vanished since Trump's announcement. The vibe was clear. Investors were scared. Let's kick off the week with Monday, April 7th. After Friday's carnage, you'd think the market would catch a break, right? No, it was another wild ride. Stocks opened sharply lower, extending the sell-off. The Dow was down big in the morning, and Tesla took a beating as analysts warned tariffs could crush its margins. So why Tesla? Well, tariffs hit hard on companies with global supply chains, and Tesla's got factories in China. Some analysts called it a political symbol, tied to Elon Musk's Trump connections, which spooked investors. But here's the twist. By the end of the day, stocks clawed back. The Nasdaq actually inched up slightly, while the Dow and S&P 500 closed lower, but not as bad as feared. So what happened? Some investors started betting that Trump might soften his tariff stance after the market's reaction. Plus, homebuilder stocks like Lennar got a lift from news that Canadian lumber imports were exempt from tariffs. That gave a glimmer of hope, but the markets were still a mess. Oh, and one more bright spot, US steel soared 16% to a 52-week high. Why? Trump ordered a review of a blocked $14.1 billion takeover by Nippon Steel, hinting he might reverse it. Investors loved that, so Monday was chaotic, but showed the market wasn't ready to give up just yet. Tuesday, April 8th was like Monday on steroids. Stocks opened with a bang, huge gains early on as investors hoped for tariff relief, but by closing bell, a late session slide wiped it all out. The S&P 500 and Dow closed sharply lower, and even the Nasdaq took a hit. So here's the deal. Tariffs were still the big story. Investors were freaking out about what a trade war could do to corporate profits. Apple, for example, slid 5%, losing its crown as the world's most valuable company to Microsoft. Why? About 90% of iPhones are made in China, and a 34% tariff could crush its margins. But it wasn't all doom and gloom. Constellation Energy jumped 2.9%. Why? It's tied to nuclear power for AI data centers, a sector that's still hot despite the chaos. And Supermicrocomputer? It soared after JP Morgan said its tariff hit would be minimal, only needing a 4% price hike. The Volatility Index, or VIX, Wall Street's fear gauge, hit 40 this week, a level we haven't seen since 2020. Traders were bracing for more swings. Tuesday showed the market was stuck in this tariff tug-of-war with no clear winner. But hold on to your hats, because Wednesday, April 9th was historic. The market went absolutely bananas, in a good way. The Dow skyrocketed 7.9%, gaining nearly 3,000 points. The S&P 500 up 9.5%, its best day since 2008. And the Nasdaq a whopping 12.2%, the biggest single-day gain since 2001. What sparked this insanity? Here's the bombshell. President Trump announced a 90-day pause on most of those reciprocal tariffs, effective immediately, to allow negotiations with trading partners. The only catch? China was excluded, with tariffs there jumping to 145%. But the market didn't care, it was pure relief. Investors flooded back in. From its morning low to afternoon high, the Dow moved 3,500 points. Tech stocks like Intel roared back, and even beaten down names like Caterpillar caught a bid. Goldman Sachs even walked back their recession forecast, saying the pause could stabilize things. The vibe was like a pressure valve finally releasing. Now, don't get too excited. The indexes were still below their April 2nd levels, and year to date, the Dow was down 4.6%, the S&P 500 down 7.2%, Nasdaq down 11.3%, but Wednesday felt like a turning point. Or was it? Just when we thought the party was back on, Thursday, April 10th brought a reality check. Stocks tanked again, giving back a big chunk of Wednesday gains. The Dow dropped 1,000 points, or 2.5%. The S&P fell 3.5%, and the Nasdaq slid 4.3%. Ouch. So why the mood swing? Well, investors started second-guessing the tariff pause. China upped its tariffs on US goods to 125%, signaling the trade war wasn't slowing down. Plus, the markets realized a 90-day pause isn't a fix, it's a delay. Companies like CarMax got hammered, down 11% as tariff fears hit retailers hard. The major indexes closed well above their intraday lows, hinting that some buyers were stepping in. It was like a market saying, okay, we're nervous, but we're not panicking yet. Finally, we hit Friday, April 11th, and the market decided to end the week on a high note. The Dow gained 5%, the S&P 500 added 5.7%, and the Nasdaq rose 7.3%, the best weekly gain for the S&P since October 2023. What drove the rally? A White House comment that Trump was optimistic about the China deal lifted spirits. Plus, early bank earnings from Morgan Stanley beat expectations, boosting financials. Even got a buy upgrade from Bank of America, which helped the Dow. But let's be real. China's 125% tariff kept things tense. The market's still down about 5% since Trump's April 2nd Liberation Day announcement. Years to date, the Dow's off 5.5%, the S&P 500 down 8.8%, and the Nasdaq's down 13.4%. So while Friday felt good, we're not out of the woods. So what's the big takeaway from this crazy week? Let's zoom out. This wasn't just about tariffs, it was about uncertainty. When Trump announced those tariffs on April 2nd, it wasn't the rates themselves that spooked markets. It was the fear of a trade war derailing the economy. Higher tariffs could mean higher prices, lower profits, and maybe even a recession. The market's reaction, crashing, then soaring, then dipping again, shows how sensitive investors are right now. The VIX hitting 40 tells us fear is high, and with the Fed holding rates at 5.5% and projecting only 2 cuts in 2025, there's no cavalry coming to save the day if things get worse. Sectors got hit hard too. Tech and consumer discretionary stocks like Apple and Tesla got crushed because they rely on global supply chains. Meanwhile, defensive plays like healthcare, Molina Healthcare, Centene held up better. And gold, it's been on fire, hitting $3,122 an ounce as investors seek safety. This week showed markets can bounce back fast when good news hits, but it also showed how fragile things are. One tweet, one headline, and boom, billions move in seconds. What's next? What should you do after a week like this? First, don't panic. Selling at the bottom or buying at the peak is a recipe for regret. Markets are volatile, but history shows they recover. Look at Wednesday's rally. Patience paid off for those who held on. Second, diversify. If your portfolio is all in tech stocks like Tesla or Apple, this week probably hurt. Spread your bets, think healthcare, utilities, or even gold. Defensive sectors can cushion the blow when tariffs or trade wars flare up. Third, watch the data. Earnings season's kicking off with big banks like JP Morgan, Wells Fargo, and Bank of America reporting soon. Plus, we've got CPI, PPI, inflation reports this week. If inflation spikes, expect more volatility. Stay informed, but don't obsess over every headline. And here's a bonus tip. Focus on the long game. Short-term swings are brutal, but markets reward those who stick to a plan. If you're unsure, consider talking to a financial advisor to map out your goals, or check out my website in the description below. Phew, what a week, right? From a $4 trillion wipeout to a historic rally, the stock market gave us a whiplash. Tariffs, trade wars, and volatility ruled the headlines. But Friday's surge showed there's still fight left in the market. Will next week be more chaos or some calm? We'll find out soon. To be fully caught up, check last week's video on screen right now. Thanks for watching, and I'll see you next time for another deep dive into the wild world of stocks. Stay smart, stay invested, and let's ride this market together. Happy investing.